And the closing countdown just minutes away, and then it's Google time. The internet company that brought you Frugal and Google Earth delivers its report on first quarter earnings. After the bell, consensus numbers out, expecting per share numbers of $1.97 a share, revenue forecast at $1.4 billion as the stock picks up momentum going into the closing bell, up 1% right now. Back to the floor of the exchange. Bob Pisani with you for the closing countdown. Interesting day.
You know, it's a strange day. If you are long big cap stocks, you're happy. The Dow Jones sitting at a 6-year high. The S&P may make a 5-year high here. Looks like it may get close here. But if you are in small cap stocks, a lot of mid cap stocks, they were down today. If you own commodity stocks, you're not very happy. A real split bifurcated market here today.
All right, well, the closing bell rings. Google earnings on tap any minute now. The closing bell continues right here on Cnbc with Maria Bartiromo.
And hi, everybody. What a powerful day on Wall Street today. The Dow Jones Industrial Average at a 6-year high. The Dow closing at its best level since January of 2000, partly due to a powerful rally in shares of GM. The Dow tonight, as I said, highest level and since January of 2000 with a gain of nearly 80 points. Big winners on the Dow today: General Motors, Hewlett-Packard, DuPont, Merck, and United Technologies. A lot of stories behind those gains. Check out that move in GM, a 10% rally. Best day on a percentage basis for GM in 19 years. NASDAQ, however, lagging the entire day. In fact, eBay was one of the issues here. The NASDAQ finished the day down about 8 points, 1/3% at 2368, with a sell-off in eBay to the tune of 9% after its earnings failed to impress. S&P 500 at a nearly 5-year high. Check out the chart. This is a best level here in 5 years at 1311 on the Standard & Poor's with a gain of 1.5 points. By the way, two groups failing to participate in today's rally: the oils and the tech names. And the drug stocks did very well. They were basically higher across the board, but certainly oil was under pressure. And in the commodities market, crude oil prices finished the day lower. That certainly set the tone after setting yet another intraday record high of $72.49 a barrel earlier. Concerns over geopolitical tensions and low U.S. inventories all coming ahead of the summer driving season, still overshadowing that market. Trading was impacted also by profit taking on the May crude contract that expired today, so a little bit of technical issues going on as well. Also pressuring crude, word from Royal Dutch Shell that one of its key platforms damaged by Hurricane Katrina will be pumping oil at pre-hurricane levels by the end of June. So the supply issues also in the market. Take a look at where we finished on crude oil. Now at $71.95, still comfortably above that $71 a barrel level, down today 22 cents a barrel. Bob Pisani, our eye on the floor of the New York Stock Exchange. Bob.
What a strange bifurcated day. We were just talking with Dylan. It's very simple. If you own big cap stocks, like many stocks in the Dow Jones Industrial Average, Boeing, United Technology, even General Motors, you were pretty happy today. But the rest of the market, frankly, wasn't very exciting here. The Dow Jones Industrial Average did close at that 6-year high. The S&P 500, no, sir, did not quite make a 5-year high. We like to follow the small points differences here. So let's call it a selective big cap rally. More declining stocks than advancing stocks at the New York Stock Exchange. That's because a lot of the small cap stocks were to the downside all throughout the day. So small caps didn't participate in the rally. Speaking of not participating, did you watch precious metals today? Silver down 14% today. Actually was halted in the middle of the day because it was limit down. Silver is down another 4% after trading here today. What's the problem? Too many people are long. It's not liquid enough, and there's a lot of expectations of a silver exchange traded fund coming, so a lot more people are long than normal. Gold was down about 2%, also down after trading here. Take a look at commodity stocks that are not precious metals, because some of the general, shall we say, base metals were also a tad weak today. So you've got your Alcoa's weak, Nucor and all the steel stocks were weak, Phelps Dodge and the copper stocks, BHP Billiton, all of the others like Inco, especially to the weak side. So a very, very split day down here. Maria, back to you.
All right, Bob, thank you. Digging deeper now into the markets. Joining me, Andrew Berkeley, market strategist with Brown Brothers Harriman. Andrew, nice to have you with us. Welcome to the program.
Hi, Maria. Good to see you.
Give me your thoughts on what was behind today's rally.
Well, I think you had some good earnings reports. As Bob mentioned, you had GM out. That was a good lift. I think there are people in there looking for values. that certainly was a value in there. But I think Bob really hit on the key word when he said bifurcated. That's really what we saw today. We saw a very mixed market. As he mentioned, breadth was actually negative on the day. So overall, I don't really view that as a very bullish signal, even though the Dow, as you mentioned, went out to a 6-year high today.
And not only that, but technology was under pressure. NASDAQ was under pressure. But let's face it, the technology and the NASDAQ part of the market has been really the standout for Wall Street year to date in 2006. Google's just coming out in a few minutes with earnings. We're waiting on those numbers. What do you think the charts show us as far as technology is concerned right here?
Well, I actually am getting a little bit concerned about technology. You look at a lot of the big technology companies, like eBay was a good example today. eBay really didn't participate in the rally. The earnings were a little softer than expected there. So I would like to see a little bit more from technology if I were to get a little bit more bullish here. But we actually think that leadership is narrowing more than broadening, and that's generally not a good sign for the overall market.
Let's see if we get some bullish stuff here. Google is just coming out. Stay where you are, Andrew. We'll be back to you in a minute. But first, let's get to Jim Goldman in California with the latest on Google earnings, which are just crossing the wires. Jim.
You know, Google is always a challenge when you're looking at these numbers as they move across the wires. But as best as we can tell, doing the math right now, the company's net revenue, this is their revenue subtracting the traffic acquisition cost, comes in at $1.53 billion. The street was closer to $1.44 billion, but you got to check out this EPS number. As best we can tell, Google is reporting $2.29. The street was looking for anywhere from $1.94 to $1.97. This is just absolutely blockbuster news, and you will see this stock soar on the news. Up 6%. We are hearing that the stock could go significantly higher as we pour through the numbers. The company's conference call scheduled to begin at 4:30 Eastern. But as we pour through these numbers, looking for the strength here, I can tell you that Eric Schmidt in the company's press release says, quote, Google had an exceptional quarter with strong growth and profitability. That's an understatement. From both Google properties and the network, we are driving this growth through investments in our infrastructure and our people and our product innovations. The real question now is what the expense line is. But, you know, it's almost at this point, you almost don't care. When you got a company that's beating by over 30 cents a share, this is just absolutely blockbuster. And just about every analyst that we spoke to today said it all comes down to EPS and revenue growth for these guys. Google is a very simple story to tell, and you see it there. The shares popping now at $430. We're going to go through the numbers a little bit more, Maria. We're going to listen to the call, and we'll bring you more details as we get them.
Yeah, I've got the company sees 2006 CapEx growth coming in greater than the revenue growth. That's for 2006. And the first quarter earnings up 60% at $592 million on a net basis. The first quarter stock-based compensation at $115 million for the fourth quarter. I'm sorry, what, Jim?
I was just going to say that you know, just about everybody on the street was at 12% sequential growth. That was what they were looking for, 11 to 12%, depending upon who you talk to. That would be deemed sort of optimistic and good. But looking at these numbers, this is closer to 17% sequential growth. So right there, you know, the company is beating on a huge, huge line. Exceptionally good news.
All right, Jim, thanks so much. We'll be back to you as you continue analyzing those numbers. Back with Andrew Berkeley now, coming to us from the American Stock Exchange tonight. It looks like